Hello ladies and gentlemen, welcome back to another episode on this public investment playlist series. If you follow this channel for quite some time, you know the drill. I started this playlist back in 2022 and each month I turn on my camera and I publicly disclose what I'm doing, what stocks I'm doing. Sometimes you will see me opening the portfolio and it's down, other times it will be up. But the strategy is long-term DCA, dollar cost average, so every month contribute fixed amount. I've been increasing this amount. When I started this playlist I was contributing only 40 euros. I was still I don't think I was working, and 40 euros for me was a lot. Back then I thought, okay, 10 euros per week, that's more or less a dinner. And yeah, nowadays I cannot even buy a dinner for 10 euros. Anyway, let's open the Trading 212 app. And sorry for my voice, I'm a bit tired. I am in Mexico City this time. I'm trying to keep this playlist for as long as I can, each single month, to do at least one episode of update. And as you can see here, we have a total value of 13,200, but this is considering the cash. Trading 212 is always changing here the display. But yeah, you can see here the history. So the first pie we created was back in January of 2022 and we had invested 40 euros, and right now it's worth 53. Back then, what did we invest in these ETFs? In Google, Alibaba, Amazon, and Tencent. So you can see here the track of all the pies that we've created in the past. Let's see the performance of the portfolio right now. So the total value of the stocks is 6,308 with an unrealized profit of 1,086. So that means if I were to sell everything today, right now, let's say I need to buy a house, well, not with this, but I need to get married, or I have a medical expense that I really need this cash, I would have this 20% return. Of course, I would have to pay taxes depending on which country you live. If you are from Portugal, you would pay 28% on these gains. But then again, this is for long term. This is money that I don't need right now, and hopefully throughout the future I will get promoted in work, I'll be able to accumulate more money, and I'll be able to contribute more to this portfolio. You can see here the allocation. So 25% is going to the S&P 500 information technology sector, so the ticker symbol QDVE. So that's 1/4 of the portfolio. Then the second biggest position is the S&P 500 ETF. So this comprises of the 500 biggest companies. The first one was more directed to IT, so you have stocks like Microsoft, Nvidia, Apple, Adobe, you name it. Then you have Vanguard ETF All World. So this is a more diversified ETF. It has roughly 3,200 stocks. Of course, the returns are not as high as the other two, but then again, this is all a question of managing your risk. Then for jumping to individual stocks, my biggest position is Google right now, followed by Alibaba, and you can see most of them are in the green. I am losing money on Nike, Intel, Adobe, ASML, KSPI, Johnson & Johnson, and you have here a company that I've invested in the past and it went bust. So remember, there's always risk when you are investing, and don't trust here a random guy on YouTube. Anyway, I just use this channel as a time capsule for my vlogs, for my trips, and for this public investment portfolio, because it's nice to see something created from zero until amount to something, or maybe it will all go to zero. Either way, it is documented and it is fun. We are opening here the pie that I created for this month. And sorry for being fast today. I really need to speed up. I have work to do, and I need to be concise. So let's see. Edit pie. We are contributing this month 25% to the KDVE ETF, so the information technology sector, IT sector, then 20% for the S&P 500, 15% for the Vanguard All World. As you can see, this corresponds to 60% of portfolio, so I'm still diversifying a lot. You will see in previous months where maybe I invested more in individual stocks, but at this time the world is a bit uncertain. I don't have time to be researching on companies, so I'm allocating most of it to ETFs, and that will be the way to go for now. Things will change, and it's always good to look back into some of these videos. Then I'm splitting 5% to Amazon, Google, Alibaba, Nike, PayPal. I'm adding this position, JD.com, Pinduoduo, and KSPI. So everything is a bit divided, and you can see that the past performance and forecast for the future would give a return of 9.90%, but remember, past performance isn't indicative of future results, so take this with a grain of salt. Hopefully it will be better than this, but only time will tell. Like I said, some videos you open the portfolios up, other times the portfolio is down. Right now we are at 20%. If I'm somehow able to maintain this for the rest of my work life, I think I'll be in a comfortable position. If not, which is most likely, it will still better than just saving your money on the side and losing purchasing power to inflation. Well, let's go. I almost stopped my screen recording. So let's invest. Okay, we are right now contributing 300 per month, and maybe in the future we'll contribute more. Sometimes when the market dips and it coincides when I'm making these YouTube videos, I contribute a bit more. Other times not so much, but the idea is if you buy 1% higher or 2% lower, it really won't make that much of a difference in the long term, as long as you keep consistent throughout the strategy. And this is the way for me to also emotionally detach, because it's not healthy, in my opinion, to be shaking your portfolio constantly. And if you see your portfolio go down and start stressing, well, you're really not improving your quality of life. And at the end of the day, this is what this is all about, I think. Well, next, and because I am on this side of the world, probably the individual stocks will execute, but the ones in the German market will not, because the stock exchange is not open at the moment, but we will see. This will start executing. So of course the ETFs haven't executed, which is the bulk, but the other 40% have executed, minus KSPI, which is also in a different stock exchange. So if we go see our portfolio right now, it's up to 6,600, and the return has diminished a bit because we don't have any time for these positions to really appreciate and depreciate. And as I get bigger contributions, this might impact it better. The best time to invest was yesterday, the second best time is today. And with that, I'll have to stop this episode for today. I have some vlogs coming up when I have some time to edit them, and I'll see you next time. Bye.